On April 2nd, 2025, Trump declared it Liberation Day. 2 days later, Wall Street had lost $6 trillion. $6 trillion! Gone in 48 hours. The biggest wipeout since the pandemic, maybe worse. What happened? Was this just another correction, another panic, or was it history playing the same tune again? Tariffs, speculation, greed, fear. Oh yes, the ingredients never change, only the names. This is the story of April's crash, the return of tariffs, and the $6 trillion shock that rattled the world. Here's how it unfolded. First, the meltdown. Screens bleeding red, anchors choking on panic. Then the triggers. Trump's tariffs on Chinese tech, AI hype crumbling under its own weight. We'll dive into margin debt and bubbles, then rewind to 1929, 2000, and 2008. We'll see how protectionism keeps coming back, and how fear and greed never leave. Finally, the hardest truth. Who profits when markets collapse? Because trust me, someone always does. So buckle up, this isn't just about Wall Street, it's about us. The week began with fireworks. Stocks soaring on AI hype, headlines screaming a new era. Oh yes, a golden age that lasted about 24 hours. Then came Trump's Liberation Day, and suddenly, bang, the screens turned blood red. $6 trillion vanished in 48 hours. $6 trillion! That's the GDP of entire nations. Gone. Anchors froze live on air. Bloomberg called it a bloodbath. In London, a presenter whispered, "Contagion has begun." Tokyo's Nikkei fell so hard, one trader said it felt like gravity doubled. And for small investors, it was brutal. A retiree in Ohio refreshed her account and gasped, "That's my house gone." A Texas day trader live-streamed his panic, voice cracking, hands trembling. Students who had thrown savings into can't-lose AI stocks wiped out quicker than a TikTok trend. We've heard this soundtrack before. 1987, Black Monday, traders fainted on the floor. 2020 pandemic crash, anchors compared it to a heart attack. Now again the words echo, meltdown, panic, collapse. Different century, same punch to the gut. The spark was political. Trump slapped sweeping tariffs on Chinese tech. Billions in duties, aimed at semiconductors and AI hardware. Investors didn't wait. China threatened retaliation within hours. Supply chains shivered, and the dream of endless AI profits cracked like glass. Because the truth, valuations were insane. Startups with no revenue priced like gods. Every CEO promised AI transformation. Every analyst hyped it. It was dot-com deja vu, only with smarter branding. The headlines turned vicious overnight. "Trade war back on," screamed the Wall Street Journal. "AI bubble punctured," wrote the Financial Times. Faith vanished in a click. Ordinary people felt it immediately. A father in California told reporters he'd lost his kid's college fund in 3 days. On Reddit, panic threads exploded. "Hold or sell?" Some joked bitterly, "AI was supposed to take my job, not my savings." We've seen hype collapse before. Railroads in the 1800s, biotech in the 1990s, crypto in the 2020s. Tariffs didn't create the bubble, but, oh, they sure popped it faster. Speculation was already rotten. Retail traders poured into meme stocks again, this time dressed up as AI plays. Broker apps handed out leverage like candy. Margin debt, record highs, bigger than 2007, bigger than 2021. At first it looked genius, stocks soared, TikTok lit up with 10x AI wins. Teenagers bragged about buying Lambos soon, but margin is a loaded gun. One dip and losses explode, 1% down becomes 10, 10 becomes a margin call, and forced sales spark more selling. Avalanche mode, it crushed ordinary people. A nurse in Florida watched her $20,000 nest egg melt into $3,000. A truck driver in Detroit joked darkly, "I lost more than my rig's worth." Families who bet savings on the future realized they'd mortgaged their present. History is merciless on leverage. In the 1920s, buying on margin fueled the Roaring '20s and the Great Depression. In 2008, mortgages multiplied into financial weapons. In 2025, the disguise was AI, but the weapon was the same: borrowed money chasing hope. And, oh yes, the bill always comes due. History doesn't repeat, but it rhymes and sometimes it shouts. 1929, tariffs and speculation collided. The Smoot-Hawley Act strangled trade, stocks fell, then collapsed. The Great Depression began. 2000, dot-com mania. Startups with no profit, no path, yet billion-dollar valuations. Investors believed in eyeballs, not earnings. The fall erased 5 trillion. 2008, greed wore a different mask. Banks packaged toxic mortgages as gold. Wall Street sold lies until the lies collapsed. And now, 2025, tariffs meet AI hype, different costumes, same performance, optimism inflated, debt magnified it, panic destroyed it, even the vocabulary recycles. In 1929, meltdown. In 2008, contagion. In 2025, both words and more screamed across every screen. And ordinary people, always the victims. Farmers in the 1930s lost land, tech workers in 2001 lost jobs, homeowners in 2008 lost houses. In 2025, small investors lost their dreams of security. History doesn't just rhyme, it mocks us. Because every time we swear we've learned, we haven't. Tariffs always return dressed as heroes. Protect American jobs, shield our industries, save the nation. Sounds noble, right? Oh yes, until the bill arrives. History shows the truth. In the 19th century, Europe's tariff walls suffocated growth. Merchants complained, citizens paid more, industries lagged behind. In the 1930s, Smoot-Hawley turned recession into catastrophe. Exports collapsed, partners retaliated, millions suffered, and here we are again. Trump's tariffs thrilled his base, crowds cheered, "Made in America." But CEOs shook their heads. Retaliation is coming, they warned, and it'll hit hard. For ordinary people, the cost is simple: prices. A mother in Chicago said groceries jumped $50 a week. A farmer in Iowa feared his soybeans would rot unsold. A tech startup in Austin worried chip shortages could kill their business. Tariffs promise strength, but deliver weakness. They wall off markets, stifle innovation, protect the past instead of the future. It's economic cosplay, patriotic speeches with tragic endings. History repeats, nationalism wins votes. But walls, they always collapse. Markets run on numbers, but numbers run on people, and people don't change. Greed inflates bubbles, fear pops them. It was true with tulips in the 1600s, railroads in the 1800s, dot-coms in the 2000s, AI in 2025. When greed rules, skepticism dies. When fear hits, rationality vanishes. Investors stampede. Either way, we saw it in 2020 when COVID fear erased trillions. We saw it in 2008 when credit froze, and we saw it again this April. Social media amplified it like never before. One viral tweet sparked a sell-off. One TikTok clip showed a trader sobbing. Millions watched. Fear went viral. Literally. Ordinary people feel whiplash. Booms raise hopes, busts crush them. A teacher in New York sighed, "I don't get markets anymore, just headaches." That whiplash isn't new, it's ancient. Yes, technology changes, apps, algorithms, AI. But the psychology, eternal, fear and greed. They're carved into us, and they always cost. Here's the cruelest truth. Every crash has winners, every single one. While small investors panic, hedge funds profit. While pensions bleed, insiders hedge. While families lose houses, private equity circles like vultures. April 2025 was no exception. Short sellers betting against AI stocks made billions. Funds scooped up assets for pennies. Crisis didn't destroy wealth, it transferred it. From the unprepared to the prepared, from Main Street to Wall Street, from millions of homes to a handful of towers. Same story in 1929, same in 2008, and oh yes, same today. So what do we learn? Markets change, charts change, technology change, but people, they don't. Fear and greed repeat, protectionism returns, and history always collects its due. This was Wall Street's 6 trillion shock, but it won't be the last. The cycle never ends. More crashes will come, more bubbles will burst, and when they do, history will be waiting. If you enjoyed this episode, don't forget to like and subscribe. Don't accept what you think you know. Stay curious.